Good morning. I'm incredibly honored to be here at this moving and tremendous initiative of the Shai family. Watching the last presentation, for me, is difficult because of the year we've gone through, but it is nothing compared to the difficulty that your family has gone through. And I think everyone in the room feels that and is with you in this initiative. What I'm going to talk about in the next half an hour or so is to try and give some perspective on the Israeli economy in the aftermath of the war. And one of the things that I'm going to try and show, and I apologize, you're going to have to work a little bit over the next half an hour, because I'm going to show a lot of graphs, and we're going to try and explain to them. But what I'm trying to give you is a feeling of how the Israeli economy has had tremendous resilience over this last 14 months. And I'll also at the end talk a little bit about the challenges. I'm not worried about the Israeli economy over the next 1-2 years. We'll get through that, no problem. The challenges are over the next 5 to 10 years. And some of these initiatives that you're talking about today are part of that process of how the Israeli economy will face the next generation of the world economy. And that is a challenge that is utmost in the Bank of Israel's minds of how we look at how things go forward. One of the advantages of being a central bank is that we have a longer horizon, a longer thinking about it than most politicians. And that gives us the challenge to do that. Just to give you some form of background to that, I've been 37 years at the central bank. I joined the central bank as a young student. I'd arrived on Aliyah from England in 1984 and joined the central bank while I was doing my second degree there. And I've seen the Israeli economy completely be transformed from a third world economy with hyperinflation. For those of you who can remember 1984, 400% inflation. My first job at the Bank of Israel was to request an emergency loan from the IMF because we'd run out of foreign exchange. Fast forward 30 odd years later, I ended up running the bank's markets department in charge of a portfolio of foreign exchange reserves of $200 billion. That is part of the journey that the Israeli economy has gone through. And it has transformed its economy from being a manufacturing goods agricultural economy to being a high-tech service economy. But what will we be in 15, 20 years' time? And that is something I'll leave you at the end of it. Okay, so I promised you some graphs that will be slightly interesting to look at. What I want to try and explain to you is why the Israeli economy has managed to get through this last year in such good fashion. And it's been the hardest, longest, and the most difficult war that we've had, at least since 1973. Now, the reason for it is that the Israeli economy entered into the war in a good situation. The balance sheets of households, corporates, and the government were all in a good situation on October the 6th, 2023. If you look at the top left-hand graph, you can see the GDP in relationship to its trend. That's the green line. We had been growing since the COVID crisis faster than our trend line, our potential growth level. So the potential growth then was around 4% per year. And as we came out of COVID, we were continuing to grow at a pace that was faster than ever before. That is reflected in the top right-hand graph, which shows us the situation in the employment market. Unemployment was at historical lows. The total number of people working, which is the blue line, I think it's blue, the employment rate was the highest it had ever been. That meant that households, if you can think about it, were enjoying a situation where their balance sheets, because of the wages and because of being fully employed, were in a good situation that would enable them to get through, with the help of the government, over the next 12 months. The bottom left-hand graph is the fiscal situation, the balance sheet of the government. And the bars show the debt to GDP ratio, so that's the debt of the government of Israel as a percentage of GDP. What you can see is the long-term path was a decline in the debt-to-GDP ratio of the last 25 years, from a level that was close to 100% at the beginning of the 2000s, the crisis of the dot-com bubble, down to 60% before COVID, a move up during COVID to fund the various programs that were put out, and then back down again to 60%. So when the war struck, the government, the Ministry of Finance, had the fiscal space to be able to take in the extra government spending to get the economy through it. The challenge will be to make sure that the debt-to-GDP ratio comes back down again, so that when the next crisis comes, and unfortunately there will be another crisis, whether it be a global crisis or it be a domestic crisis, to allow the government to be in the situation to get through it. The same thing can be reflected in what's in the international position of the Israeli economy. I want you to look at the right-hand graph now, which shows what we call the basic balance, which is a combination of the current account surplus, which is exports minus imports, and FDI. The bars, are the total current balance in billions of dollars. The orange line is the current account surplus. Again, that went through a revolution over the last 25 years. Up to about the mid-2000s, Israel always ran a current account deficit. We imported more than we exported. That changed, particularly with the growth of the high-tech sector, so that the country now has a positive current account surplus and a large current account surplus. Adding to that, the net FDI flows, which have been positive over the last couple of decades, and you reach a very strong international position whereby Israel has a surplus of assets abroad compared to liabilities. And that gives it the resilience to withstand major shocks. Adding to that the $200 billion reserves that the Bank of Israel holds, which is like saying, putting out a warning card to investors when they want to short the shekel, that they will have to face the central bank in the markets. And if you remember the story I started on at the beginning, where my first job was to request an emergency loan because we didn't have any foreign currency, we are in a completely different situation today. Unfortunately, we have a long history of geopolitical conflicts. And in the past, and here's a number of them that are marked on the graph with the GDP figures up above them. Yeah, it's the quarterly figures. So it's the Second Intifada, the Second Lebanon War, a number of things. And we've always managed to grow quickly out of that series of crises. But this crisis is very different to the previous ones. I'm not belittling this crisis. This crisis, in terms of its length, in terms of its cost, both in terms of the cost of human lives and of the cost that will come about because of the number of soldiers and individuals who have not just been killed but are injured. The number of people, and you can see it in the streets of Israel, the number of people walking around with artificial limbs is becoming noticeable. And that scarring will be with us. But the fact is that the economy will still get us through that. But we still have to think about the challenges going forward. On October the 7th, on October the 8th, so October the 7th was a Saturday. On the Sunday, we knew the markets were going to open up. And on the Monday, the international markets were going to be opening up as well. And at the central bank, we sat over Saturday night and early Sunday morning to decide what we were going to do. The first thing we were clear about is we were going to open the markets. There was no question we weren't going to open the markets. We needed to show that the country was back in business. And the second thing we did, and we'd seen at the beginning in the night, we'd looked at the markets in Sydney and in the Far East on Sunday night to see where the shekel would open up, and we put actually money into the markets to feel where it was going to go. And we saw that the shekel was already way over 4. And so on Sunday morning and Monday morning, we came out with a series of programs to settle down the market. It's not about changing the risk premium. We know risk premium will have to be adjusting to the situation in the war, but we wanted markets to work in in a normal basis, that would be buyers and sellers who could meet in that. And for that, we sent out a program of a $30 billion foreign exchange intervention program and liquidity in the various capital markets. And that allowed the markets to settle down. And then people began repricing in what was going to be the risk in those different markets. But it was done in an orderly fashion. Look at a clip on. So once we got over the initial shock, the economy obviously took a shock in the fourth quarter of 2023. And I want to show you three graphs about the shock and then the recovery after it. The first numbers that we look at, because most statistical data comes with a lag, is actually credit card expenditure. We get on a daily basis the amount of money being spent by Israelis through their credit cards. And from that, we can track what's going on in the market. That's the left-hand graph. So you can see that the very sharp drop in the quarter four. But then the rebound that comes very quickly as people take on board what's happened, but get back to their normal way of life. And that's showing a degree of confidence, and I'll give a further example of that, that is quite remarkable in terms of the resilience of the people. The second graph is the unemployment rate. Now, again, this is a little bit, I hope you can see this. The normal unemployment statistic remains very low, even throughout this quarter four period. It's around 3%. On that, you have to add the number of people who are put out on furlough. So if you're in the north or you're in the south, your factory might be closed down, the workers will put out on furlough. Plus add in the number of people who weren't able to get into work because of the missiles falling, educational system being closed. And that's the big figure that you can see of 7.8%. I know we have a representative from the medical sector in Israel today who was very involved in a previous crisis. One of the things that allows Israel to get through the COVID crisis was that our medical system continued working through it. So we didn't suffer the problems that happened certainly in the UK of long COVID or people not getting to medical tests. And in this crisis, which was crucial was that the schools came back online as quickly as possible. Because if you've got kids who are having to stay at home because the educational system is closed down, you can't go to work. You're going to have to stay to home. As soon as the schools came back online, except for the ones around the Gaza Strip and in the very first north, the country could get back to working as normal. So in the previous crisis of COVID, it had been the medical the health service that allowed us to get back to working to normal. In this crisis, it was to getting the schools back to work what was key. There are two areas of the economy that have been severely hit by the war and haven't recovered. The first one, obviously, is the tourist industry, which is basically been non-existent now. The number of tourists coming in, you can count them on more than one hand, but it's very low, and it's not going to recover for another couple of years. The second one, which is the more important industry, is the construction industry. The construction industry is around 8% of GDP. The problem in the construction industry is that about a third of the workers were Palestinian workers who are no longer coming in. So essentially, you've lost a third of your labor force. And that is meaning that the number of houses being built is going to come down. And that is still one of the major challenges to the economy and to the government, is how do you get the total workforce back? You can either do it through some form of arrangement for bringing back in the Palestinian workers, or you're going to have to do it by bringing in foreign workers. There is some increase in local Israeli workers coming into that construction industry, but it's not enough to meet up the gap. The impact of that you can see on the right-hand graph, which is housing prices. Now, this is one of the most stunning graphs in this presentation. What you can see, housing prices have been coming down a little bit as the Bank of Israel had put up interest rates. But about 4 or 5 months ago, we began to see a rise in both in activity, number of transactions, and in prices. Now, think about this. We're in the middle of the most traumatic war that we've had at least since 1973, but people are going back into the market to make the most important financial decision of their lives. And that shows a degree of confidence of people in the economy. And I have 4 children, 3 of them working in high tech in Tel Aviv. And my daughter is in the process, though it's taking her a long time, to buy a house there. And at the beginning, when she told me that she was going to buy a house, and make that decision, and settle down, and I think most of these people around here will know that prices in Tel Aviv are not cheap in the housing market. That shows a degree of confidence of people in that their lives will continue in Israel and they will make the economic decisions to go on with it. The other thing that's been getting us through is that the export sector has been holding up pretty well. And this is just showing the service exports and the goods exports. It's not the stellar performance that was, let's say, a few years ago, but it's still surprisingly good given what's going on. Now, I'm not going to talk about inflation, even though I'm a central banker, because I think you'll probably be less interested in that. I want to go forward and talk a little bit about the markets. The first thing that happened during the war was that there was a repricing of risk premium, the risk to invest in Israel. And that's reflected in, and the graph I'm using here is the CDS prices. The CDS is a credit default swap to ensure investors who would buy government bonds in Israel or something. And the blue graph is the premium of Israel. And you can see it jumps. The red line is the US. We were more or less being priced like US prior to the crisis. It jumps from around 50 to over 150 at a certain point. And we've seen in the last probably about a month and a half, it begun to come down quite dramatically. Now, it won't come back down to the levels it was prior to October the 7th. There's still going to be a higher risk premium out there because we still live in a world of higher geopolitical risk. But the markets are pricing us in terms of higher risk, but it's not got out of control. I think people realize that the Israeli economy, the Israeli markets will still be out there for business, and that's reflected in what's priced in geopolitical risk. But it will mean that we're still facing a more difficult environment than we faced prior to October 7th. The interesting one has been the shekel. So the shekel is the most liquid market in Israel, and it's the first one to reflect what goes on. But since the beginning of the war, the shekel has actually strengthened. After that initial spike over 4, about to 4.10, the shekel has slowly come back down again to, now it's in the last month because of the improvement in the geopolitical situation, we've seen lots of people coming back into the shekel. One of the lessons of foreign investors over the last 20, 30 years is you don't make money by shorting the Israeli shekel in crisis periods. You generally lose money if you're doing it. Or if you're going to do it, you have to get out pretty quick. But I will still say one thing about it. The shekel is still weaker than it was in terms of where it would have been in the normal relationships. And this graph is showing that the light blue line is the Standard & Poor's on an inverted scale, and the dark blue is the dollar shekel. And you can see that prior to mid-23, basically what happens if the Standard & Poor's was going up, shekel strengthened. Okay? It was that sort of, and the opposite happened, it would go the other way. The relationship broke down in 23, and that was part and parcel of the turmoil that was caused. I'm going to be slightly careful about my use of words, even though the ambassadors left. Around the judicial reform process in the country. So there was clearly something going on that broke down the traditional relationship between the Standard & Poor's and the dollar shekel. And this carried on throughout the war. But I don't think the war was the major process. I think that the major process has started in the previous year. What we're seeing in the last month or so is perhaps the relationship is coming back online, which is a positive sort of feature. Similarly with the Tel Aviv Stock Exchange, big underperformance in 23, most of 24, and now very strongly coming back in the last month, again with the ceasefire going on. I'm going to flick through this. I'm not going to talk about the high-tech sector. I'll just leave you with one graph on it. Well, I'll leave you two graphs. I know I'm getting the warning signs in terms of minutes, but I'm going to sort of be a little liberal on just not look in the direction of the organisers. What you can see, first of all, in terms of the real activity data in the high-tech sector, is that it's been doing pretty well. Left-hand graph is the revenue index of high-tech. The middle one is exports, and the number of people being employed is the right-hand one. So yes, the pace of growth has slowed down during the last 2 years. The right-hand graph is an interesting one. It looks like the amount of people being employed in high-tech has sort of become sort of static. But that's not because of the something to do with the high-tech sector. It's just that we're not producing enough people who can work in that sector to meet the demand. So we're more or less employing anyone who we can do in that high-tech sector who has the capabilities to do it. And that will bring me back to something in terms of the challenges going forward, which is to get more people with the skills to work in a high-paid sector. Because in the end, an economy wants to get as many people working in jobs, but not just any job, jobs that pay well. The funding in the high-tech sector slowed down dramatically in end of 22, 23, but that was a global phenomena. It's difficult to separate it from the war, but it looks like that it more or less follows global patterns rather than anything that's particular to the war, and we're already seeing a peak-up in the last 2 quarters. Now, it's not back to the levels that you saw in 21 and 22. We're not going to go back to those levels. That was abnormal. But we are beginning to see a pickup in the amount of activity in the high-tech sector, and that's a positive sign. And now, as I promised, I'm going to talk about some of the challenges when we look forward and leave you with it, and their challenges over the next 10 to 15 years. This graph shows the productivity gap between Israel. So productivity, as mentioned, as measured by GDP per worker, how much we produce per worker, and as a percentage of our competitors. So let's take the top graph. So we're looking at productivity in Israel as a percentage of the productivity in the OECD countries, which is like the major industrial countries. And you see it's around 90% now. What you can see in this graph quite clearly is from about 10 years ago, there was a meaningful improvement in the productivity of the Israeli worker compared to the generations, the 2 decades before that. But we still have a large gap, let's say, to the United States. The United States is the orange line. So yes, productivity has improved as a percentage of the productivity in the US, but it's still only about 2/3 of the productivity there. So if you think about it, the Israeli worker is only 2/3 of productive. But as we all know from statistics, averages hide a lot of sins. So we have one sector that is clearly at least the equivalent of the US in the high-tech sector, but we have the rest of the economy, which is not being able to meet that challenge of improving productivity. And one of the reasons is these 2 graphs here. Well, I'll take the left-hand graph, and I'm going to talk about it. Now, this graph is a little bit difficult to understand, so I'm going to walk you through it. But it's, I think, the most important graph about the Israeli economy for the next 10, 15 years. It takes the scores that are done by the international tests on school children and young adults, which is called the PIAC scores. And it looks at them in this graph in terms of the skills that people have. It measures the skills that people have. And it divides up each country into the best 10%, the next 10%, and so on, until you get down to the bottom 10%. And then compares each country, and in this case Israel, to in each decile, its counterpart in the OECD. Now you can see here, on the right-hand side, that our top 2 deciles are pretty good. You know, we're just like the OECD. I would say it actually underestimates it because it doesn't take into account, I think, the entrepreneurship and the agility of the Israelis who are in these 2 top deciles. But look at the bottom 4 deciles. We're way worse than our OECD counterparts. Now, part of that is coming about because the two groups that form a large part of that, and I've got a graph on it here, will be the ultra-Orthodox and it will be the Arab sector, okay, that don't have the skills, are not acquiring the skills, which is more a choice question in the ultra-Orthodox world, to survive in the world economy of, let's say, 15, 20 years' time. Look at the bottom left-hand graph. No, the left-hand graph. The left-hand graph divides up the economy, or the population, into three groups. The blue block is non-ultra, there's a mistake in the English, non-ultra-Orthodox Jews. 2015, it was around 74%. By 2040, it's projected to be 63%. Now, we already know, this is almost certain, we already know that figure because it's the kids who are now in first grade. So we know that figure. The grey line is the ultra-Orthodox section, which is today 7%, or was 10 years ago 7%, is slated to be 14%, and by 2065, and this is a bit of a projection, to get to 26%, and the orange is the Arab community. If we can't get the grey section and the orange section to have the skills to survive in the world job market in 20 to 30 years' time, we're going to have a problem. Now, I don't think this is inevitable that they won't have the skills. We're already seeing major improvements, particularly in the Arab sector, where education is becoming more important, and they are becoming, at least they're not at the moment getting into the high-tech sector, but they're certainly getting into the medical profession and acquiring skills. And there's no reason to expect that that process won't carry on. The challenge is obviously in the ultra-Orthodox section. But I classify this not as a problem, but as an opportunity. Because if we can get these communities to improve, then the Israeli economy will be ready for the challenges of 2040. In addition to that, you have to improve the educational system throughout the country, because there's still being a big gap between what is needed and what the reality is today. Now, I hope I've given you a taste both about the present situation, the resilience of the Israeli economy today, and shown you something about which I think is actually not just a challenge for the next 20-odd years, but actually part of the hope situation. Things aren't inevitable, but you need to make the decisions to make them happen. Thank you very much for your time.